Good evening, friends. Welcome, one and all, for the ninth session of the Option Omega Conference, India's largest retail option traders online conference. Friends, this is Ashok Devanam-Priya, your host today. We have a very interesting speaker, a man who has played multiple roles in diversified industries over the past 2 decades. He's a serial entrepreneur who took successful exits from his BPO business before his venture into the financial markets. Let me introduce Shivakumar Jayachandran, whom we call just Shiva. Yeah, he's just Shiva. I like that. I like to call him that way. Where the moment he walked in into the conference, I was wondering where is Shiva, just Shiva, because I didn't see Shiva Kumar Jayachandran. So Shiva, indeed, it's a great pleasure to have you in our program. Shiva is a busy man. I troubled him a lot to bring him on board for this session. So, Shiva, on behalf of the entire audience and my family of Traders Gurukul, I extend my warm welcome and greetings to you
Thanks,
into the program.
thanks, Ashok. Thanks for the introduction. Lovely introduction. It was pleasure talking to you as well. And thanks one and all for like attending this program. I know you guys have been having a wonderful time in the last 8 or 9 sessions with the various speakers sharing their trading strategies and so on. So let me not take much of my time. I think Ashok has given a brief about me. So I'm Shivakumar Jayachandran. Today, like we are going to deep dive into what I do mainly, which I'm doing is like an intraday trader as a scalper, full-time scalper. Okay, so when I talk about scalping, everybody would have been like into like a different kinds of strategies, right, on the intraday. So we will go and see what exactly scalping is all about. The first thing, I'm an NISM certified professional for the equity derivatives, but I'm not a SEBI registered advisor. So any information on this presentation is only for the educational purposes. So please do not trade solely based on this information. And you all know that option trading is having a large potential reward and also large potential risk. So please do take care of the risk that is involved, because sometimes it can give you a good reward and at the same time it can blow out your capital as well. So take care of that. And most importantly, any past performance of any of the trading systems or the methodology is not necessarily an indicative of the future results. So please do consult your financial advisor before taking any financial decisions. With that being said, what are we going to do? I'm a simple trader, guys. I don't talk much about what to say, alpha, gamma, Greek, theta, all those things. I wanted to keep it simple because I started my career as like a hotel management graduate, moved into healthcare background, came into the financial sector now. So most of the things what I have learned is through the markets. The market taught me. When the markets taught you, what you will normally do, you will pay a heavy price, right? As any trader would do. I have also done that. I have also lost huge sums of money in the market without knowing what are the things which I'm doing. I always under the impression that anything which goes up has to come down and anything which goes down has to go up. That was my impression. And then like I was doing that, and like any basic trader would do, like we will keep on averaging the positions when the position goes in our like against our favor. And at the same time also we also have the belief, right, only when we buy a particular option or a future, the market reverses from that and then it goes automatically on a reverse direction. So we always have this attitude and we think that like only because of this the entire market is crashing, right? So it's not the case. So once you deep dive into it, and then I started to decode various things, what are the things that can help me be like a better trader. I started the career like in 2007 as a like a trader, but like being a full-time trader, maybe you can consider me from 2014 once I started to like what is it, trying to exit my company, whatever the company which I was running into, healthcare BPO. Okay, so this is what we are going to do now. What are the things which I use to connect the dots to scalp? Okay, the most important thing for me will be the world markets. When I talk about the world markets, what is that which I track in the world markets? I'm going to toggle between the screens, guys, so that you will know what are the links which I use and then like how it is I'm using it and so on. Okay, so I use the investing. Most of the tools, whatever I'm going to share, is going to be mostly available freely available over the internet, or it will be coming part of the trading terminal, except one tool which I have built it on myself, so which I'll be sharing it across as well. So this one is from the investing.com. I think many of you would be using it. Why do we need to use this? The most important thing is when I say connecting the dot, this is one of the dots which I needed to track, because our markets is going to be like it is not going to moving in a different direction. We needed to converge with the world markets, because like currently all the imports, export, everything happens across the world, right? So we are connected across, and which is like a mother of all markets, the US markets. So which are the markets which I needed to be tracking, especially to know what is the trend and so on. I don't know how many of you track the Dow futures through the day and night, but it'll really help you if you wanted to scalp. Why? Whenever you have a movement in the Dow and so on, you will definitely see the positive move happening across the world markets. So usually the Dow futures is something which you needed to track. So when I track the Dow futures, usually the timings will be like between morning 5:30 to night 1:30. So please ensure that you track the Dow futures. Based on that, the moves will be happening. I don't know how many of you observed for today. In the morning, the Dow was like almost 200 points in the positive. As of now, it is only showing like a 26 points in the positive. So something which was extremely over bullish in the morning, and that helped the sentiment on our markets, and completely now it is trading in a flat range. So what was the reason for it to be like extremely bullish? Yesterday night, there was a Fed chairman speech at Jackson Hole, and he was saying like we are going it was a completely dovish statement. So he said like we are going to do all necessary things to like ensure that the inflation and other things are in control, and like the funds is going to flow, and the fund is going to be the this market is completely driven by liquidity. And when they heard that there is going to be more liquidity that is going to be coming into the market, that has propelled across the emerging markets as well. So that was the reason, and we outperformed. There were like a lot of other reasons for us to outperform that we will also look into that. But that sentiment booster in the morning when the Dow futures was like from 50, 100 to 200 points, it automatically boosted our markets as well. So we will be tracking the Dow futures. That is something which I will be normally tracking it through the day, because this is almost like 24 by 7, morning 5:30 to 1:30, because once the Nikkei markets or the Japanese market open, you will get to see the Dow Jones available. So yesterday what happened, Dow Jones like closed around like 80 or 90 points in the positive, but this is a very good move in the morning, but now it is trading in the flat territory. Okay, more than the SGX Nifty, I will be concentrating on the Dow futures, because that will be like a more relevant for me. There are many days wherein the previous day the Dow would have closed in the negative, and the following day, if the Dow futures is opening in the huge positive of 100 or 200 points, our markets will completely discount what has happened previous day, and you would see our markets opening up in the green. Okay, so that is something, that's a reason Dow Jones future will be like a very, very important feature to track. And in case if you wanted to track on European indices, track DAX, CAC, and the FTSE, because these three can also on certain days, let's say for example, there are any like a political event happening in Germany or in UK, or any like what to say, a particular trade deal is happening. All those days you will see like that particular index is going to like a reflect, and that positive vibe will be like a triggered across world markets. Sometime back you had the Deutsche Bank issue with the German index, and like that was getting felt across, right? So that's the reason it is important to at least track some of the key markets. So DAX, CAC, and the FTSE. DAX is for German, CAC is for French, and FTSE is for UK. And coming back to Asian markets, you needed to track the Nikkei. Nikkei is almost similar to what US does the previous day. So US, if it is like a closing at 200 points, the next day morning you will see the Nikkei reflecting it. Why the Nikkei market is like entire market was positive? Why the Nikkei alone suddenly fell today? So we had the news that the Japanese Prime Minister is quitting due to like health reason. So there has been a continuity, right? It is the continuity is gone now. Okay, so the negative sentiment will have an impact. So that is going to be only for that particular market. That's the reason it's important for us to know what is happening around the market, why that particular market is going down or going up. So that is the reason we track it. And Hang Seng is more or less similar to our market, which is one of the emerging market, which is nothing but the Hong Kong market. So Hang Seng, whatever that you are seeing it in Hang Seng, you will see that similar kind of a move happening in our markets as well. Okay, so that's the way I will be looking at. And the last one which you can look at is Shanghai, or the Chinese market. But Chinese market, it is like an isolated market actually. So you won't see like an whatever that is happening across is going to reflect in China, but China will play it in a different tone. Only reason why we needed to be tracking of the China markets is, say, for example, if there is going to be a yuan devaluation, or there is a Trump and like a trade war tweets and so on, that will get reflected on those market, and that will have a negative sentiment across Asia and across, like I say, for example, when it is Asia, automatically you will see the steel sector and then all the what to say commodity sector going down. That's going to have an impact on our markets as well, right? So that's a reason. So the first page, what we saw is the Dow futures, or like the most important, the US, the mother of all markets. One of the dots, if the Dow future is going to trade in the positive or in the negative, that will also set the trend for our markets. The next one, I'll be keenly watching on India VIX. Why India VIX? Why is the relevance of like India VIX is important? India VIX is very, very important. Why? You can look at for intraday or look at for positional. I will give you both the scenarios. India VIX also have like an what to say positionally. Whenever you see the VIX is playing somewhere between 11 to 14 range, you will always see the buyers flocking in, especially the long-term positional buyers. Whenever it is between 11 and 14, okay, 14 to 15 is the zone wherein they will try to stay away and see whether should we really enter in the market or should we exit our position. Okay, so currently where is our VIX now? It is at 18, but if you would have seen the historical averages, you would have seen the VIX is playing below the set 10, 11, 12, maximum to 14, unless and until there is an election time or an budget time. During those time or like some crisis, you would have seen the VIX spiking. What is a VIX? It's a volatility index of the Nifty 50. You would have seen this kind of a crazy VIX once in like a millennium kind of an event. The last time when we saw was like a 2007-8 during the Lehman crisis, and currently during the pandemic, we are seeing the VIX reaching above like 80 mark actually. I don't know how many of you traded on that day. That was a max 87 almost it went and then cooled off from that level. And that was the day wherein we also had the Nifty going to 7,500 odd and bouncing back from there and then continuously rising. And what is that indicating? This is the clear thing which I want you to look at. This is for both intraday and for positional. What is that? When the market is moving higher and VIX is cooling down, which is very, very bullish. So what was happening today? How many of you were trading today? I hope few of you would have been doing the trading today. I'll just show you what was happening in the VIX today. Then that will give you an insight. So this is the chart of VIX today. Look at this. In the morning, it climbed almost to 18.85. And then slowly but surely in the afternoon, it started to climb down from 18.8 to 18.2, which is a very, very goodish, like a bullish scenario. When the VIX is cooling off, that is a very, very bullish scenario on an intraday basis. So it is meeting my first requirement of market moving higher and VIX is cooling down. That is going to keep the sentiment on the VIX going to be bullish. I'll also show you an example when the VIX is going to be bearish as well. I hope you guys would have seen the VIX was like around 83 level sometime back, right? I'll just open it again. It is just going to take us a moment. So when this is like the second scenario which we are going to see now. What is the second scenario? Market moving higher and then VIX rising. This is a bearish scenario. Sorry, we are going to see the third one because I don't have an example, but I will show you that as well. When the market moving lower, VIX rising. That is a bearish scenario. Look at this. This is the area wherein the fall started. Okay, so our markets were like almost in the 3 months. If you'd have seen our like average VIX was somewhere around 12, 13, and 14. During the month of February, March, we started to spike. This is the first spike which happened. On that particular day, the Nifty fell almost 431 points, which is almost like 303.71%. So you all would have been surprised. Like this is the day wherein like, wow, Nifty has fallen 431. It cannot happen. So let me go and buy a call. Then you would have literally butchered, right? Many people would have got butchered. This is the area the long term investors always exit. No matter what, they are not going to be comfortable. They wanted to see the VIX stabilize before they re enter the market. And this is the area where they aggressively will exit their position. And look at what has happened the following day. This is the following day. It cooled off for a day or two, and then again from 22 to 30.